this crypto bull market over? Are we heading into a broad economic recession, and are we going to get much lower prices here on Bitcoin? Is now the time to be exiting your crypto? We've got loads to cover off here as the market has been puking over the last couple of days. We've got a lot to get into, guys. If you appreciate these updates, smash the likes. Do not forget to subscribe as always. Check out the link in the description to our crypto community, ijazzcrypto.com/TG. Guys, check this out. We spoke about this M pattern forming, us getting rejected from the top line support, coming to the downside. We had to hold this important support and we failed it. And we worked our way to my first my first dip buying opportunity that I shared with you in the last video. I said, guys, I'm nibbling here and I'm nibbling further down at the bottom of support. But why are we falling? Does the fact that we've now fallen below 60,000 here on Bitcoin mean we're pulling back for a broader crypto pullback? Has this bull market now been ended prematurely? We're gonna need to break this down. There's a lot of dynamics going on in the market, and if you're listening to the wrong people right now, if you're listening to these moon boys, if you're listening to people who like to scare you, you're gonna get the wrong information. It's very important you understand the nuances of what's going on. That's what this channel is dedicated to. This channel is dedicated to stopping you guys from listening to moon boys and actually try to understand what's going on, right? Because if you can understand, you'll be in a good place. We're gonna start off here by zooming out to the weekly to remind ourselves, which is what I've been reminding you over the last kind of couple of weeks, that we are in a very important consolidation pattern. This pattern here with the two green lines is a consolidation after a very long upward trend here by Bitcoin. Whether you like it or not, wherever you bought or not, Bitcoin has gone from 15,500 up to a new all-time high, just shy of 74,000. Bitcoin's done that. It's now consolidated sideways towards that 60,000 level. That's the reality of what's going on. We're still in this pattern. That being said, we need to understand some nuances. If we fall from here, guys, things will get very painful. If we lose this broader structure, understand that Bitcoin can see 50,000 and it can even head down to 45 for the next serious level of support. So there's a lot of downside here given the situation we're here on Bitcoin in this consolidation pattern. But equally, understand that if you're buying here and Bitcoin actually over the next kind of weeks or months manages to break out from this pattern and head towards 100, these will prove themselves as good dip buys. So that naturally lends itself to the question, what is going on in this market? I thought you were telling me about, oh, we're going to get a rate cut. Isn't that really good? And why is this market not pumping? We've had the halving. Like it just seems like crypto is not what it used to be. Like, do I need to get out of this crypto? Let's break this down. You have to be patient with me, but I'm going to break it down for you because, look, last week, we're sat at 71 here on the fear and greed index. Right now, we are sat here at 34. This market's nervy, right? And what happens when the market's nervy? People make silly decisions because they don't follow the data, they follow their emotions. That's why I love to buy when the market is fearful. You've heard me say that time and time again. But let's understand exactly what's going on. Now, we're going to start off with the Fed rate monitor tool. If you remember, going into the FOMC last week, right, we spoke about the fact that the markets were predicting a rate cut. We knew we were going to get that rate cut, and therefore markets were like, okay, fine, we're going to work towards this. Then Jerome Powell came out, and he kind of made it obvious. He did what is known as teeing up the rate cut. Now, surely that's positive, right? And after that FOMC meeting, I made a video. You guys can go and watch it, right? I said, why is the market dumping despite us now getting a more uncertainty that we're getting our first rate cut? It doesn't make sense, right? And I explained that, guys, there's two types of pivots in the economy. If the Fed pivot from a position of strength, if they've got control of the economy, if they know what they're doing, and they choose to pivot with what is known as a soft landing, think of an airplane landing, they're doing it very gently, great stuff. The market's going to feel really positive about that. If, however, it's a crash landing, oh, let's cut rates now. Market's not going to like that. And over the last kind of couple of days, we started to get our first bit of data that is suggesting that the Fed have not been as truthful / not got as good control of this economy as we have thought. Let's jump on over here to the stock market, which has been absolutely throwing up. Now again, same context as Bitcoin. We'll talk about altcoins in a sec, but same context as Bitcoin. The broader economy, NASDAQ, S&P, they've been doing really well. Right? They've been at record highs. So they're due a pullback, and they've got that now. And part of it was triggered by a weaker than anticipated jobs report. So on Friday, we got a weaker than anticipated jobs report, less jobs created than we anticipated. They grew by just 114,000 new jobs versus the 179 added in June and 185 that was expected. So 185 was expected, 114,000 jobs. If that wasn't bad enough, the employment rate increased to 4.3, the lowest we have seen since 2021. So basically what the market is now saying is, whoa, Jerome Powell, mate, you're only cutting rates now because you've got to mess this up, haven't you? You're driving us into a recession. And that's where the fears are coming in. So all this market is now doing right now is just taking some of their bets off. They were getting super hyped. They were running at record highs. They're saying, hang on, chill out. Let's put things into perspective now. We've been running at all-time highs. We're expecting the rate cut. Great. But what if we're having a crash landing? We need to be a little bit careful here. So you saw some of that risk rotate off. You saw the US 10-year Treasury go up. And of course, we can take a look at the Dixie as well. So hopefully that makes sense, right? Just because you're getting a rate cut doesn't mean the Fed has everything in order. And that's what the market's going to talk about. In my video on the day of the FOMC, I said exactly the same. I said, watch out for the data that comes out now, which includes company earnings, by the way. So this company earnings cycle, which we're getting now as the companies are delivering earnings, we need to listen. I know it's crypto, but we need to listen to understand if those companies are experiencing any of the typical signs of a slowdown or a recession. If we hear any of those from the big players, from the big companies, Amazon, Intel, all these other guys, right, Nvidia, it's going to be a problem. So if you look at this here, look at this. Some mega cap names saw steep losses during the day as Amazon's second quarter results sparked investor concerns about big tech blowout levels of AI. Right? E-commerce giants slid 8.8% after missing their estimates. Intel cratered 2.6% after announcing weak guidance. Nvidia lost 1.8% following a 6% loss the day before. So we're seeing a little bit of nervousness around some of these company earnings. We've got to continue to watch that trend, as well as the trend of inflation and the job figures. We don't want to be thrown into a recession is what this market is now focused on. So bringing this all back to crypto, like I said, if this panic continues, we may well get some really nice dip opportunities, right? We may fall out of this structure. But if and until we fall out of the structure, I'm sticking to what I said. I'm taking this opportunity to buy. And I will take the opportunity to buy at the bottom of this pattern as well at this 55,000 level. If we get to some of these levels, there's no reason for me not to nibble this. I mean, the whole point about crypto is taking risks. I can't sit here like a chicken and not buy when, one, you're touching your EMA ribbon, and two, you're pulling back deeper into your EMA ribbon. I will be taking these opportunities to buy. If we lose our weekly EMA ribbon, guys, which is at 51,500, if we get a weekly close below that weekly EMA ribbon at 51,500, we've got to reevaluate. We've got to understand, okay, at that point, this steep upward trend we've been on is actually over. Maybe we're going to go sideways for a bit. Maybe the bears are really strong and want to pull us back down to 45,000. But it's a bit premature to be calling that right now. It's something we need to be aware of. We need to understand the dynamic that I've just shared with you, but it's not something to panic about right now. We're in this pullback. We understand why this pullback is happening. Like I've just explained in this video. If none of that makes sense, listen to it again, because there's quite a lot to take in. But at the same time, it's not a reason for me to panic. I still like this consolidation pattern, and I will be taking my chances with some nibbles here. Hope that makes sense, guys. If you like this type of content, smash up the likes. Do not forget to subscribe. And no, the bull market is not over yet. Crypto will not die that easily. Thanks for watching, and I'll see you in the next one.